Oh, hi everyone. Thanks for coming along to this session, this afternoon session here in the UK for us. I know a lot of you are joining us from the US and Canada and all sorts of other places. So wherever you are in the world, you are very welcome. I'm literally, David's just had to step away from his machine for a couple of minutes. So I'm just waiting for him to join me, and then we will start officially, as it were. But in the meantime, as you can see on the screen, which I hope you can, there's a piece of fundamental news that's come in, which is at 3 o'clock, which is the JOLTS job openings, and it's really the number of, just here, it's the number of job openings during the reported month, excluding the farming industry. Now, obviously, last Friday, the NFP numbers were truly dreadful. They were a negative number. So clearly, the Fed's priority is very much going to be employment and what they can do to get people back to work, even as the virus seems to be rampaging through the various countries. But the JOLTS is quite interesting because, as I said, it's the number of job openings, as it were, and the number really hasn't been much of a change. And the nice thing about Forex Factory, I use two, those of you who come along know I use two calendars. I've got Forex Factory because it's easy, and it also has the facility to open up the release into a sort of graph format. And as we explain in our Forex program, you kind of read fundamental releases, fundamental news in the same way that you read a technical chart. So you look to see whether there's been a trend, and we can see here 14, you can see a rise in the numbers sort of peaking in 19, and of course then we had that last year we had this plunge with the pandemic, and you take it together with the unemployment data. But an importance of this is, regardless of what you trade, whether it's Forex or whether it's you look at stocks or commodities, it gives you a great background into the state of the economy. And given that certainly for the US, the Fed, one of the Fed's mandate is, apart from price stability, which translates into interest rates, is the employment market. And that kind of, you sort of forward, and you think forward, and you think, right, okay, what are they going to have to do to improve the jobs market, basically? So that's why it's important to keep an eye on the various items of fundamental news, even though you may not think impact you directly. Right, the other calendar news is more of a news feed actually that I look at is Financial Juice. You will find more releases listed by Financial Juice, and also on investing.com. But the news feed is pretty good. It's good enough for what I want. I actually subscribe to it. There is a free version, but it is slightly delayed. But the cost of the feed isn't that much. Right. So that's what I wanted just to highlight, and didn't necessarily want to put it into the recording. David is back, so that's great. I will take that down. Just to say, in the session, if you've got any questions on anything we say or anything you see and perhaps you don't understand or you want an explanation, please just type the question into the chat box, and we'll be delighted to answer them for you, either on air or type the answer into the chat box. Right, just going to turn myself off for a second. Hello again, and welcome to this session where we are going to be looking at the US markets from the perspective of day trading. I've got I think we've got some stocks, we've got some indices, and I think we've even got a currency or two. But before we start, as usual, and I've jumped ahead, may I just draw your attention to the disclaimer that I know you can see on your screen. keeps disappearing. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. And also, please do bear in mind, everything we say in these sessions, they're kind of for education, to help you become a better trader. They're not, we're not here to make buy or sell recommendations. Right, very quickly onto the next slide, which is, dear, I'm really having a problem with my slides today. I do beg your pardon. Right. What are we going to be doing in terms of technical analysis? Well, we're going to be looking at the charts through the prism of what we call volume price analysis. And I know a lot of you who come along are already familiar with the concept, with the methodology. I know some of you have bought the book. Some of you have also invested in some of the specialist indicators that we have developed to support that methodology. But just to let you know, this is where you can find it. It's on Amazon. It's still a bestseller. It's been now translated into 2 versions of Chinese, one for the mainland, which is simplified, in Taiwan, Japanese, and lately it's also available in Vietnamese, and we are really very, very, very proud of it. And I think David tells me, are we up to 1,000 now reviews? Yes, we are over 1,000 reviews. We weren't quite there last week, but we seem to have got there this week. So that's very, very humbling and absolutely fantastic. Fantastic, because so many more traders are aware of the methodology, and given the comments and given the emails I get, it is really, I'd like to think, make a huge difference to both their trading and investing. The book is accompanied by a companion whereby there are just examples of the methodology. It was something that we'd been asked for because the book just covers the concepts, and it's much easier if you have a kind of example, in different time frames across the different markets. This is the one that accompanies the VPA book, and it's for indices, stocks, and commodities. There's also a version for the Forex market. And you say, well, how can historic charts help? And the reason they can help is the beauty about this methodology is the same signals, the same setups, the same combination of candle patterns, they simply recur. And partly, I suppose, they recur because as people and as traders, we tend to behave in the same way. There's a spectrum in the market between euphoria and complacency. There's euphoria, complacency, panic on the other end, fear and greed. There is this spectrum, and if you understand how the markets work, the vast majority of traders and investors are manipulated along this spectrum. But what VPA does, it highlights when that manipulation is occurring, so that you can take appropriate action. Right, so that's why the historic charts, they help. If you look, you will see the patterns repeating all the time. VPA itself, as I said, it's volume and price action, and really the best way to describe it is with this little schematic here. It also incorporates candles and candle patterns. When the methodology using price action and volume was first sort of came around, it goes back to, well, nearly 100 years now. Obviously, they would have bar charts, and there are traders who still use bar charts with volume and price. There's nothing wrong with that, but we've incorporated candles and candle patterns because when we first started, they were kind of coming in. They're becoming more, more popular with both the independent traders and professional traders, and now they pretty much, I think, dominate the technical analysis sphere. Although, having said that, there are obviously people who still use bar charts. And candles and candle patterns, books about these, there are certain patterns, there are certain combinations, configurations, and we found they work really, really well with VPA. And the last one here, which is last, but it's by no means the least important, in some ways, support and resistance. We've been talking about this in different ways: price-based support and resistance, volume-based support and resistance. And again, I'm going to talk about it today in terms of how we look at it, how the chart is configured, the structure of the chart. Now, on top of that, that's your foundation. You learn that off the chart. How you denote your S&R, that's pretty much up to you. You can do it manually, you can just draw lines horizontally, vertically, channels, however you wish. You can use Fibonacci, you can use Camarilla, you can use, as I said, whatever, however you want to do that. But those are what we call your primary tools. Your secondary tools, choice, not because they're second best. You have all your indicators, as we can see up here. To this list, you would have to I would add obviously proprietary indicators. I use a combination of standard ones and our own proprietary one, and then overarching everything is time. And by time, that's not only just time in the market, the chart that you trade, but also multiple time frames. But as always, let's go and see what's happening in the markets as we speak. Very, very quickly, we've had a look. Don't think there's really much more significant news coming out today, although we do have a 10-year bond auction, but that's not for some considerable time. With economic optimism, fine, that's really all going to be determined by how quickly we can come out of this current situation that we are in. And I just don't mean to do with the virus. I actually also mean the political situation, obviously, that is still in play in the US, and the key date now is what is going to happen between now and the inauguration. And just let's hope that emotions calm and we can have a smooth transition, and the divisions that have riven not just the US, but we've had divisions over here as well, can we can start all come together, as it were, because it's all in our best interest, right? But from the market's perspective, had a bit of a sell-off, sharp sell-off at the open. Is kind of trying to hold on to these highs. What's happening with the Nasdaq? The Nasdaq, not so much, and the reason is, if we have a look at let's see with my Nasdaq here. Interestingly about the Nasdaq on the daily chart is very, very quickly we can see. I mean, this is what I mean by a candle pattern. We have a 2-bar reversal. A 2-bar reversal, if you overlay one candle on another, you're basically getting a shooting star. It is a sign of weakness. How long that, is it going to be, is it going to be a complete reversal? It's going to be a partial reversal, but however you, whatever you say, when those two candles come together, that you are going to have, there is weakness there, and it is going to struggle to maintain, the price level that we have seen. Certainly on, this is last Friday. This was after the jobs report. We had a big fall yesterday, and this is today's candle. Looking at the volume underneath those two candles. First of all, if we step back a little bit, the volume under. Let's have, if I get my, can't see it. Can't really. Let's have a look at the crosshair here. Let's have a look here. What have I got across here? Local. My machine has been playing up really badly today, so I do apologize. Let's have a look. Let's go back to my pointer, my big pointer. Where are we? Let's have a look. That's yesterday. That's that one. That one there. Yes, it looks like there. We did have a lot of buying coming in under there. We know there's buying because of the wick of the candle, but it's the volume underneath it. It's very, very high. So we know, although in the day the NQ fell, it did actually recover quite strongly, and as evidenced by that is buying underneath that candle, and it was enough to push the NQ further into all-time highs. But what's concerning is the subsequent volume in terms of the range of the candle, the spread of the candle. It was okay, but if this was a market that was really going to take off, then we would have expected more. We have had yesterday's reversal, and this has now created, as I said, this 2-bar reversal. 2-bar reversals are fantastic. If you, particularly on the faster time frames, they can often lead to some really great trading opportunities. So 2-bar reversal with this weakness that has come in now. It doesn't mean it's going to roll over immediately. All this is telling us that there is weakness now. what's going to happen over the next few days is really going to be as a result of how weak those two candles, this configuration actually is. Sometimes you do have a bounce higher. We may need to see another signal, maybe a hanging man candle come in, maybe another shooting star. We will wait to see. Who knows? As I said, the background that is, this is trading in the background of, as I said, what's happening with the virus and also the political situation in the US. Right, let me just bring that down. What actually happened now? What also happens is when you look at that daily candle, those daily candles, and you think, oh, okay, so it is looking weak. The temptation initially is to say, right, I'm going to sell it today because it's I've got a 2-bar reversal, I've seen this signal, I've looked at the volume, etc. All my other indicators are telling me, and yes, by all means, that weakness may follow through. But you also have to keep your brain in a kind of neutral a neutral state, as it were, because yes, it shot up, almost immediately reversed lower, as we can see here, triggering volatility candles on the way, and then you have the mother and father of all hammer candles, which is the reverse of the shooting star, and you have the buying coming in. And if you're day trading and you're on the faster time frames, these signals you have to take. It's all very well saying, yeah, I can see that the bias possibly is to the downside, but there is these markets don't want to fall. They really don't want to fall. It's going to take quite a big catalyst, some big piece of news, as it were, to trigger a kind of sell-off that we saw basically back in March last year. And one of the reasons for that is something I've discovered, and you may want to consider this, particularly if you are an intraday stock trader. And this is a free site. It's dear old bar chart. I haven't looked at bar chart for years, and it's great to see. It used to be a very the site was quite difficult to get around, and it looked a little bit old-fashioned, but they have actually worked very hard on the site, and it's full of the most amazing information. And the reason you say, well, why have you pulled up the most active stock options for intraday traders? I'm not interested in options. I want to trade stocks. And the reason is this: there's kind of been there's been almost a seismic shift in the options market since last year. I think I mentioned last week, millions and millions of more day traders have entered the market using, as you know, apps such as Robinhood, Webull. Interactive brokers have a mobile. Mobile trading is now very, very popular. The downside of that, there's been a lot of criticism, particularly of brokers such as Robinhood, is that it's almost turned this into a game. Okay, we'll set that aside, and no doubt there'll be, there's lots of media articles about that. But one of the areas into which a lot of new traders have gone directly is into option trading. When we started, options they're very exotic. They were so complicated. You really didn't touch them until you really understood about the stock market. You understood the asset that the option is reflecting, as it were. So the options market was there. It was for hedging, but it was really for institutions, hedge funds, us retail traders. We just looked at the actual asset itself. The influx of so many options traders into this market, it's almost flipped it. So, and it's causing all sorts of other problems, which I don't want to go into now because they're quite sort of complex to explain. But the sheer volume of options being traded and the sheer volume of call options is kind of distorting the market. So if you are as I said, a stock trader, or even just for sentiment, if you like, it really does pay to go and see what percentage of traders are long, if you like, on the call. And what bar chart does, it does it for stocks, ETF, and the indices as well. And what you have here is these are the most active one, and you can just go through them as you. But it's not the individual companies themselves. What you're looking at is you're looking at the option volume, and you're looking at this at the percentage, the sort of ratio between the calls and the puts. And one of the things that I don't know whether some of you know, there's a guy called Dave Portnoy. Those of you in the States will probably know much more about him than I do, but I stumbled across him via my Twitter feed. I think he took to day trading because he was something connected with sports betting in America, and that all came to a stop. So he got involved in day trading, and he was tweeting out things like, stocks only ever go up, Warren Buffett, what do you know about trading, yada yada yada. You can look it up on the internet and and read what he was saying at the time, and it's dragged in so many people who were furloughed, who were at home, who weren't spending money out in entertainment and restaurants and because everything was in lockdown, as it is again, and so that money went into the market, and a lot of it went into the options market. And as I said, it's all sorts of issues and problems that it has caused, but it gives you a flavour of what is going on. Now, that doesn't mean to say that the retail and independent crowd, do they know anything that anyone else knows? No, that's not the point. I suspect they don't even look at a chart. They look at this. I understand the way the trading groups have been set up. They have using platforms like Discord, and these are quite young people. They sort of get together almost like a collective of traders, and they pick their stocks, and they say, okay, then we'll all go into, they all go off and buy calls, or they go and buy stocks in, you've got Tesla, Apple, NEO, you've got Facebook up there, Ford. Last year a lot of these were distressed stocks, and they sort of shot up. Anyway, that's a little bit of background. If any of the stocks that you're looking to trade on an intraday basis has a big presence in the options market, I really do suggest that you consider looking at bar chart and just seeing what the what, as I said, the ratio is between the puts and calls, and just to give you a little bit more background. Right, very quickly. So what's happening with the Nasdaq? Yeah, that's it, sort of trying to creep away higher from a, to try and snag some points, as it were. Well, we can see that the buying that came in here under this hammer candle here. I've got two charts. I've got the minute, I've got the 3, I've got a couple of Arenkos here as well. We're certainly on the minute. What have we got? So that was the 4. We've had a consolidation, and we're now looking like a break away from the volume point of control. A ton of volume coming in under that candle there. When I talked about support and resistance, we have price-based support and resistance, and we have volume-based support and resistance based around the volume point of control. We have our low down here. Well, again, a 2-bar reversal, but this time more of a bullish engulfing candle, a lot of volume going in there, and then, as always, nothing goes down in a straight line or goes up in a straight line. You then have a period of consolidation, but as we can see here, there's a lot of buying coming in under there, as reflected under that 10-minute chart, and now we're looking for a break, which is against the bias of that 2-bar reversal on the daily chart. But as I said, we have to keep our brain in kind of neutral, as it were. And looking at 2-bar reversals, we have a 2-bar, a really nice 2-bar reversal here, 2 candles here. And what's nice about the volume point of control, when you have these lines at the top and at the bottom, they actually give you of themselves, they give you the limits of the support and resistance that's being created by the volume point of control. The volume point of control is the point on the chart where it's in balance. It's the development of volume over time. The longer that stays in consolidation, in congestion, then when you get that break, then the stronger will be the move away. It's Wyckoff's second law. And we've got price-based support and resistance here with the hatch lines of the accumulation and distribution indicator. And just to give you an idea what I mean by Wyckoff's second law and how we look at support congestion phases, this is the euro yen. This has been possibly the most frustrating pair for me personally today, but you know, what I did, I just walked away from it in the end. This is the hourly chart for the euro yen, and it has been in this congestion for since this morning. As I said, it's even since yesterday. It's just been, and what happens is on something like the hourly chart, what it means is on the faster charts, there's an awful lot of choppiness. What's also important and key with this particular pair and this particular chart is that it's all around the S3. The S3 of our Camarilla indicator is a really important level. It's actually in a channel between the S3 and the S2. As I said to you earlier, know what your key support and resistance levels are and work with them. Use them to help you give direction for stock placement, potential targets, etc., etc. And really, you know, the longer this goes on in this fashion, it's either got to go above, it's got to get through the S2 or fall below the S3. And at the moment, those of you who are Forex orientated, we know it's not going anywhere because the lines of our currency strength indicator, each of these lines represents the currencies, they're going in the same direction. So it's in a congestion. So is it worth trying to take a trade to the short side? No, I should have known better, but there we are. No matter how experienced we are, you know, we always think that, well, maybe it's going to be different this time. I will pass over to David.
Hi everyone, good to have you with us today. Just adjust my headset. Hopefully you can hear me okay. Hopefully you can see my screen. I'm on Ninja and just looking at various what's going on at the moment. This is on this is the YM on 15 second, 1 minute, 3 minute along the top. Down at the bottom we've got the 5 minute, the 10 minute, and the 15 minute. Just go back onto the multiples where we've got all three of them, which is this one. And this is basically what's happening today. It's this is the daily at the bottom. So we had this, let's say, disconnect yesterday. Basically, the ES was trying to sell off, the NQ was selling off hard, and the YM did sell off, but then recovered. So there was a certain amount of divergence in terms of risk sentiment. You may or may not be able to see this, but that's where we're trading at the moment. I mean, it's very much a razor blade of price action. Pretty much the same here. Here's the high, here's the low, and the same over here for the ES. So it's very narrow trading at the moment in terms of intraday trading on any of these indices. And what that means, if you are a futures trader and you're trading indices, you're almost certainly going to have to step down to the faster timeframes because what's in evidence on all of these, and it doesn't really matter which one we pick out, you can see the volume point of control here. It's on all three screens. We're trading around it, not far off it. It's trying to break away, but there's an awful lot of congestion going on. So it really doesn't matter where you look. You've got these very strong levels. You've got the volume point of control, obviously, and that then gives you the profile of volume, or this great wedge of volume, which acts as either support or resistance, and where you're coming up to lower levels of volume in these areas here where the volume starts to fall away, you expect the price action to move through therefore more rapidly. If we start to come back down to it in the other direction, then you start to run into this great wedge down here. And equally, if we come out the bottom, then once you start to break away to the downside, once you get down to these lower levels, you've got much thinner volume. It's a little bit like, I suppose, I haven't thought of this analogy before, but it's a little bit like clouds. When you're taking off in an airplane and you fly up through the clouds, I'm sure many of you've done it. You go through very thick cloud, with a lot of turbulence, or you go through very thin wispy clouds and you go through that pretty smoothly. It's pretty much the same here. So you can think of them in terms of clouds, if you like, and then that is overlain with, that is looking at volume as volume-based support and resistance, or congestion, call it what you will. And then of course you have the price-based perspective, which is what this level is. This is on the accumulation distribution indicator, which works on Ninja, and it's purely based on price action and how often a level has been tested or retested and is therefore either very strong or less strong. The greater the number of times, you might be able to see it down here. This one says 5. So this level has been tested 5 times in the past and actually held firm at some stage, and is therefore a reasonably strong level. This one up here is much stronger, purely just by eyeballing it. You can see it's pretty much twice the thickness of that one, and that's how the indicator works. All these other levels down here, these are all probably 1 or 2. In fact, they are 2 over here. You might not be able to see it on the back of the histogram. But these are all relatively minor levels, but they act as clusters. So when you get two thinner ones acting together, you know, that can act as a little more serious in terms of either support or resistance. But this one up here is very strong, as you can see. It was hit multiple times over here. You can see the strength of it. It's a very strong ceiling, and I'll just move the chat box out of the way. It's a very strong ceiling in there. So if the price action gets up there, if it does break through, then if you were trading that alongside, basically happy days, because first of all, you've got a very solid platform of support then in place. And secondly, you've got this volume falling away. Now, obviously, this is on a 5-minute chart. You would look at it on a 10-minute, 15-minute, 30-minute, whatever your time horizon. But basically, that's what it's giving you. It's giving you all that information about support and resistance, either from a volume perspective or from a price-based perspective. And the indicator on MT45 works in a slightly different way. There you get a thick line, a solid line, which represents a much stronger area, and a dashed line is a weaker area. But then in the same way where you get clusters of them, exactly the same principles apply. Market's trying to rally, not really going anywhere. Found a bit of a platform support here, and we're just going sideways for the time being. I'm just looking over onto the trading view side. I can see that we've got, in fact, I'll pull it over. Let's just pop that up. There we go. And this is basically, if you like it, this is a risk profile, if you will. We've got the Aussie dollar. You can see the Aussie dollar is rising. Why is the Aussie dollar rising? Partly because of risk, and partly because the chart below it, this is the dollar index, so that's falling. So that's what's driving, Aussie dollar. This is a proxy for risk, the Aussie yen. So we're looking at the Australian dollar, commodity currency, which is risk. We've got the Japanese yen, which, as I'm sure you know, is a meter, if you will, for risk flows in and out of equities. If the yen is strengthening, then it's risk off. If it's weakening, if the yen is being bought, then that is risk off. If the yen is being sold, then that is risk on. We've had this minor rally on the Aussie yen, so again, it's kind of lining up with the fact that you've got the Aussie buying here, you've got Aussie buying here. So the markets are kind of signaling, yeah, there is a risk on aspect. And that is reflected by the dollar falling as well. And I've got the volatility index down the bottom there. So that's just really giving you a heads up. You can see what's happened to the yen. This is on what time frame is this? 30-minute on the CSI. The yen was being bought. It's kinked over. It's now starting to sell off. You can see it's being sold off with the dollar here. So the dollar and yen moving in the same direction. Pounds right up at the top here. Really, really strong up at the top there at the moment. But it will roll at some point and go into a nice reversal trade. So that's where we are at the moment. Let's just go back onto the multiple time frames rather. There we go, see what's going on. I've just got the YM up here just for convenience, but you saw there, they're all pretty much the same. 15-second, 1 minute, 3 minute, and then the 5, 10, and 15 across the bottom. And if you're going to be trading in this particular sort of market, in this sort of price action, do you have to step down? I'm not saying you have to go down to 15-second, But those are the sorts of timeframes that you're going to be looking at in order to get a meaningful trade out and away in a much faster time frame. Because if you're trading this anything other than, I would say at the moment, probably outside a 2 or 3 minute time chart, you're really going to be struggling to actually grab something of value, because by the time those group of candles that you need to make decisions have formed, the market may have reversed against that particular trend. So, this is pretty quick stuff. That said, volume and price works in exactly the same way. All the indicators work in the same way. You've got the same volume profile here underneath, very high up here, because this is where the volume point of control is. Very strong level of resistance immediately above it. Then you've got the volume falling away. You've got a low volume node coming up here. So if this price is going to get up to this level, you would expect it to get through here pretty quickly. But then in the way, you've also got these levels of price-based resistance acting overhead. It's already tested that one and failed. See if it tests again. The trend monitor, as you can see, has transitioned through to bullish. So we've gone from bearish, this bearish phase. We had a transitional color of darker red, didn't go into darker blue, came straight out the other side. So it's a pretty quick reaction. We're into the uptrend. How far are we going to go? Well, we've got this little node here, so hopefully it'll get through there. It's being held up with this price-based resistance at the moment. See what the volume's doing. It's okay, it's fine. We've got rising volume and rising price just on 2 candles there. Looks like it's going to try and penetrate through there. See if it holds above. It's gone back below it again. And this is why levels are so important, either from a price-based perspective or a volume-based perspective. And of course, we're just looking at one chart here, but you'd be looking at this across multiple time frames. A little bit of weakness came in there. You saw it with the wick to the upper body, decent volume under that particular candle. Not a particularly great reaction to it to the side. We've had a doji with pretty lightweight volume there. So, not heavy selling coming in against that particular move there. A little bit more weakness, seeing how it's tested again. It's not particularly strong, very low volume under that particular candle. Now we've got a platform coming into play. It's very sluggish at the moment. Not a great deal of selling under that volume. A little bit of a gap down on that candle. And, this is the whole point. We've had a few points here. We're now into congestion phase, and it looks like, we may be rolling over what's going on below. This is a tiny support platform of price-based. We'll just wait and see how this develops over the next 2 or 3 candles. Really all just figured off when you start to see these sorts of candles appearing with these deeper wicks, decent volume under them, it's a sign that the market is weakening. Now this could be a 1 minute chart, it could be an hourly chart, it could be any sort of chart you care to name. It doesn't matter, VPA applies whatever the time horizon. Let's just go and have a look at the other time frames, see how they're shaping up. Pretty much the same. We've had a rally, bit of a wick. We've got a pivot to the upper body there, so the upper side of the candle. So it's telling us that there is some weakness there. We've got higher high, higher low here. We've got lower high, lower low on either side. So this is telling us there's a pivot in there. A little bit of weakness coming in. The trend monitor is remaining on 1 minute. It's remaining bearish at the moment. It hasn't transitioned at all. We had a little bit of a color change here, but it hasn't transitioned through to anything else. So if we're going to go bearish, if we're going to go bullish, it's got to transition and rotate through to that particular color phase. Now we're starting to let's go back to the 15-second because we've jumped through that phase now. Carrying on up. This is what I meant about going through this area here. This was a low volume area, so you expect it to go through there relatively rapidly. Now volume is building again. We've got higher volume still at the next level, right out to here. So at this level, at 95.5, we've got decent volume at that level. So again, that could come into play. We've got a resistance overhead. You can see the trend monitor. It was blue. It went in transitional, darker blue. Almost got into red, but never got there. It went into darker red, came out the other side into darker blue. Now it's gone back into bright blue. It's basically helping to keep you in the trend, which is what this business is all about. It's not about anything other than being able to hold a position in a trend once you've got a decent number of pips, points, whatever it may be, and actually maintaining that position using everything, all the knowledge you've got of VPA, the indicators, whatever it may be. And that's why we developed the trend monitor, to do purely that job. It takes a much more considered view of price action as opposed to the trend dots, which are very close to price action. I haven't got them on here because I like to keep it fairly clean if I can. Now we've got a volatility trigger come in. We're coming back down to volume point of control again. You know, this is not a strong market. You can see it on the 5-minute. You've got it over on the 10-minute. You know, this is not shaping up to a strong market at all. It's just very fragile. If you go back to the dailies, and what we're always looking for, there we go. I mean, it's pretty much back to par. The days that we're looking for are the days when we get really strong price action, solid moves. It's backed up by all the other risk characteristics are all aligning. You're looking at the yen, you're looking at what's going on with the dollar, you're seeing the VIX. And when they all align, that is when you get these strong trends developing on an intraday basis. And at the moment, we're not seeing it. Everything's kind of going sideways, very mushy. As Anna said, we've got this 2-bar reversal on the NQ. You know, that's not a particularly, when you overlay one on the other, then what you would get is a little body here with a big wick to the upper side, decent volume under there, not huge. It's just a signal of weakness. You can call it bearish engulfing. We call it a 2-bar reversal, but it's essentially the same thing. So at the moment, we are just going sideways. And if you have to trade, then you'll trade down on the very fast time frames. Otherwise, it's a question of sitting here, waiting, being patient, setting your levels. Just pop this one up. For example, if you were looking at this to the long side, then clearly the level that you're going to be eyeballing is this one, because if the market gets through that, then that is a great signal that there is strength in the trend. You've got an excellent platform below. You've got low volume to the upside. You'd go up onto the 10, 15, 20, 30 minute just to figure out what was going on. But that's the sort of level you would set yourself to. If this market's going to break to the downside, what levels would you be looking at? I haven't got any price levels on this particular time horizon, but certainly I'll be looking anything below this sort of level. Once you get down with some decent momentum into this sort of level here, then you're into low volume. You haven't got much in the way of price action to come to hinder progress to the downside, and that's what you'd be looking at. And you'd be looking at that obviously across the time frames. Just go and have a look at that on 10 and 15. There we go. So what you're looking at, if we go on to, let's go up to the 15. Let's get that out of the way. Move the chat box up there. There we go. This is on 15. I've got the Camarilla levels on here as well. So we've got the R1, S1. This is basically we're trading in the buffer zone around the volume point of control, which is why it's all so compressed around this region. And all we're seeing is volatility, congestion, and it's a question of being patient and waiting. This is the level up at the top. You want to get through, and down to the underside. Well, there's not much in the way of, certainly in terms of price-based support that could come into play. You've got these levels here, which are not particularly strong. And then as volume falls away, you'd be looking to move down into that area there. Let's go and see what's going on in the currency futures while that just oscillates around there. Actually, let me go to the currency majors because the dollar was moving. Okay, this is what we've got on the majors. These are on 30 minutes, so fairly slow in comparison to what we have been looking at. But in terms of the moves in the dollar, very much on the pound. This is the pound up here, extremely strong at the moment still. And it's up in isolation. It's very unusual. Don't often see this. Just wait a minute, just pop that over. Let's rearrange that. There we go. That's fine. There we go. Just pop that over again. It's very unusual to see this where you've got one currency in isolation. Normally you have 2 or 3 up here and a bunch at the bottom, but at the moment everything else is down. And this end of the currency strength indicator, this is on 30 minute. Pound is right up at the top, and it gives you some idea of how long a currency can stay overbought or oversold, a lot longer than you think. And in this case, it has been relentless. We did have a dip earlier on. It's recovered, it's climbing, it's still up there. It may be up there tonight, maybe up there tomorrow morning, but at some point it will move and it will go down to the bottom, because that's what currencies do. It's a constant process of mean reversion from oversold to overbought and back again. That's why you're seeing that cable is really the strongest of the lot. The others, yeah, there are moves, but it's not. You haven't had this very strong trend that we've had in cable. We had some congestion building, then we had a big injection of volume, pushed it up nicely again. And you can see what I mean about the speed that the price action moves through these regions. Where you've got low volume on the histogram, that is where you expect an injection of momentum, an injection of pace. And the same time it got through this level, which was capping it off here, which is very strong. We had a cluster here of one strong one less strong. So it was capping off that price move. Then you get an injection of volume up through there. Yes, you got volatility. What are you expecting following a volatility trigger? You are expecting one of two things, either congestion to follow or a full-blown reversal. In this case, we got extended congestion, which went on for what, 2 or 3 hours here. Then we've got another injection of momentum with good volume supporting it. So, volume pricing and agreement there, moving on to the upside. And obviously you've got a very strong platform now of price-based support, just eyeballing it here in terms of support from below. In terms of the other pairs, not great. Dollar CAD, Aussie dollar, Euro dollar, dollar Swiss, no real strong movement there. And the reason for that is because if I pull this over, this is on 30 minutes as well. In fact, it's the same as on the trading view on there. This is the reason why. They are all trading in this cluster. The only one that isn't is the pound up here, and all the rest of them are trading in this very narrow, compacted range, going sideways. The franc, the euro's tried to rally, it's kind of rising. The CAD's falling. The New Zealand dollar, that's trying to kick up. The yen's rolled over a little bit. Aussie's trying to rally a bit, but they're all contained in this area, and that's why you're not really seeing any strong trends develop. So it's a question on that time frame, at any rate, on 30-minute, of just being patient and waiting for those moves to develop. Just go on to the futures, currency futures at the top here. Similar sort of thing. These are all on the same time frame. This is 5 minutes, so we've stepped down to a much faster time frame. This is the 6A. This is the Aussie dollar. 6B, that's cable. 6C is, oops, sorry, go away. 6C is CAD dollar, not dollar CAD, because these are all inverted. These are all against the dollar because they're futures. Euro dollar, yen dollar, yen dollar and New Zealand dollar. So they're all quoted against the dollar. Working exactly the same way. VPA applies, all the indicators working exactly the same way, and of course you can use the currency strength indicator for trading those as well. Just want to hop over and see what's going on in terms of gold. I've got that somewhere, there we go, and have a quick look at oil as well. Gold took an absolute hammering the other day. This is the daily chart for gold. It's the February contract, there we go. But a big volatility candle, and what we expect to see on a volatility candle, as I said just now, is a congestion, move into congestion, or a reversal. So we're waiting, ton of volume under there, decent amount of buying under here, but it's not really reflecting. It's looking a little bit bearish right now, and if it does break to the downside through this region down into this level, it's going to go all the way back down, possibly down to 1770 in due course. Intraday, of course, it's just exactly the same. This is a 15-second chart for gold. You can trade in exactly the same way. Nice move there. Trend monitor bright red. Bearish move, moving down into low volume. A little bit of buying coming in just there. You can see it. Wick to the lower body. Decent volume under there. Some buying coming in there, but the overall sentiment at the moment is bearish. Let's go to the 3 minute. There we go. So we're rotating around the volume point of control. We've got this again, back to levels. You can see how strong that level is through there. It's come up, it's tested, retested it several times, can't break through that area. then it's gone back down to the volume point of control through another area immediately below this blue dashed line. So that's been breached as well. So there's a ton of resistance. If this market tries to reverse against that volume point of control, there's a ton of resistance here. You can start to see the trend monitor starting to transition into bearish on that particular time frame as well. Hasn't rotated on 5 yet, and on the 10-minute, it's just maintaining what was already a bearish situation for that particular market. Just have a quick look at oil, which has been rising quite steadily. There we go, and we're almost up to $53 a barrel. Oh no, we're going to go. Yeah, I just want to show you something else. Just over on stocks. Let's hop over onto the stocks. This was this is a stock we wrote about. Literally, I think went up this morning actually. I've got several up here. We pick off some of these on Anna's site from time to time. Just go back and revisit them. This one in particular. Everyone talks about stocks moving higher. If you're a stock trader, then you're going to have a bias to the upside because stocks are programmed into our DNA, if you like, almost, that we expect them to rise all the time. That's what we expect. It's just the nature of, I guess, the market, because it is a risk market, but we always expect stocks to rise, and of course they don't. And this one in particular, we focused on, I think, several weeks ago on Kellogg. We were setting up for a nice short. I think it was trading at $61, $62, but the reason it was setting up so nicely was because it was just developing this platform. And once you start to get through this region here on the accumulation distribution indicator, that's a very strong platform of support. It then becomes a very strong ceiling of resistance. And once it's broken through there, it's been pretty weak anyway. We've got this, these tops in over here, this weakness. It's trying to rally all the time, tries to rally again, weakness, and then it rolls. And that's what we've the analysis put together is saying, yeah, fine. This is looking like a nice short, and this is not a trade recommendation, but I know that people who do follow Anna have been benefiting on this particular stock. And there are lots of different ways to benefit. If you trade stocks regularly, then the stock can be borrowed within the brokerage. That's a traditional way of doing it. It's more expensive. You also open yourself to the liability of paying any dividends out, which are due whilst you are holding the stock. So you've got to be aware of that. But basically what the broker does is he or she borrows the stock from another customer and gives it to you to short, which is fine. It's standard practice. The better way of doing it, and certainly if you're just getting into stocks, is to use options, use puts and calls. You buy puts for markets that are going down, you buy calls for markets that are going up. You can buy and sell them, so you can buy and sell both puts and calls. But this is a nice example of a stock that you could trade quite happily with a put, low risk. The cost of trading is minimal, and it just gets you into the stock market rather than, as we have done a lot over the years, both from an investment point of view, but also in terms of cover call writing, where you actually hold the underlying stock and you cover it with an option. So you're basically selling an option, but you're not selling it naked, what's called naked at any rate. You're selling it with the coverage of the underlying stock option itself. Generally on the US markets, they're quoted in hundreds. So you buy in a block of 100 of the underlying stock to cover, or in the UK, it's 1,000. But VPA works in exactly the same way. These are very fast charts. This is 1 minute up at the top. Sorry, it's quite compressed here. That's 2 minute. I think this is 3, and that's 5, and then this is 10, I think. Yep, 10. That's 15, and that's a monthly. Sorry, I was looking at something else on that as well. But in fact, when you're looking at the monthly, if you're looking at this as an option that you're going to hold for maybe a few weeks, maybe a few months, what you're trying to figure out now is, well, where is this going to take me? How far? What's the travel on the trade? And we've gone through the S4, which is on the Camarilla levels indicator. This is on the monthly. We've got the S5 down here. So that is not an unreasonable target, particularly as you've got this level here where it did reverse. This was back in 2019 sometime, early part of. So, there's a decent amount of clear water here. There's very little in the way of, we've gone through this region here of price-based support. That's been breached. We're out the other side. We're through the S4. And, where are we going? Well, we've probably got another, $3 or $4, maybe $5 of profit potential in there in terms of the option as it breaks the downside. And of course, even when markets are rising, it's not always the case that all boats rise with the tide. In the stock market, it's not true. So you will find stocks that are falling. There is, as I say, there is a preponderance to trade to the upside. So I have a bias to the short side in the Forex world, which I'm sure you will know, and I'm always looking for opportunities for trading in the stock market, short to the upside, but certainly to the downside as well. I'm looking at structures where, particularly breakaway trading in the stock market, where you have the volume point of control, where a stock has been in congestion for a long time. It's one we would pick out for covered call writing because that's what you're looking for a lot of the time. But in this scenario, what you're looking for is you're looking for those levels above and below. You're looking for congestion phases that have been going on for some time. And then it's a question of waiting, putting it on your watch list, waiting for it to break that level, and then opening a position, whether you're trading covered call, whether you're trading options, whether you're trading spread betting, whether you're trading through your brokerage, whatever it is, it's what you do the whole time. You have this watch list of stocks on the horizon. I've got a load of others here. Caterpillar is another one, which we're looking at longer term for benefiting from what is like to be big capital investment. And Caterpillar up there, Cat is a classic example of benefiting from such expenditure, obviously through the plant manufacturing business. Get rid of that, sorry about that. But again, it works exactly the same way. We're on a stock here on very fast time frames, got the trend monitor here, red right the way through the piece, all the way across pretty much. Even on the monthly, it's starting to transition here. You can see it's come out of blue and we've gone into darker red. So the whole picture is very negative for this particular stock. It's Kellogg's, by the way, K for Kellogg's, snap, crackle and pop and all that. If you're in the UK at any rate, perhaps not in the US, perhaps they've never had snap, crackle and pop, I'm not sure. So there we go. Let's go back and see what's happening on the indices very quickly. See if we've actually had any movement at all. Well, it's trying to rally, but it's very, very fragile. The dollar's come back a little bit. The Aussie yen is still climbing fractionally. Aussie dollar's still going up. Yen's still selling off, weekly, but it's not terribly strong. So it's just a question of being patient and waiting. Sorry, I've had the chat box closed. Do you have a video on how we can set up your screens like yours? The short answer is no. Well, having said that, you'll see this obviously in most of the videos because I tend to use NinjaTrader a lot for these sorts of sessions, Renee. In a way, it doesn't do justice to NinjaTrader 8 actually, which is a shame in a way, but I found this works better for me. Because we are trying to get much information on the screen, bear in mind this is a webinar. This is not how we would set up our screens ourselves, but this is a webinar. So we try and get as much information as possible. I've got time and sales windows down the side here as well. You've got these little buttons on here which you can click on and basically set up multiple charts, as many as you wish across the, it's one of the functions, it's one of the features of NinjaTrader 8 as opposed to NinjaTrader 7, which was the precursor to this version. And that is one of the big changes. So you can put multiple screens behind, but because we're obviously showing this in a live environment, it's much easier to create these 6 windows like this and then just resize them. There has never been on NinjaTrader, and it's one of the things that I know was absolutely everyone was crying out for, was to have the ability which you do have on TradeStation, and you do have on MT45. Ironically, you don't have it on. Yeah, you do have it on TradingView as well, where basically you pull up a load of charts and you click a button, and the whole lot just fill to the screen, all nice and neat. They may not be necessarily in correct order, but that's how you don't have to resize them. These I have to resize all the time, which is a bit of a pain, particularly if things get screwed up in terms of the resolution on the screen, which it does happen from time to time. So that's how they're set up. It's very simple. It's just a single screen. I haven't used the function there. That's how I do it. But as I say, this is very much for presentation purposes. What we do for our own trading, yes, we will have these multiple screens like this, but obviously we'll have multiple monitors as well. So it's not quite so, everything's much larger, obviously. I'm still trying to crawl up. Let's just go back to the 15-second just to wrap up very quickly. Where are we? There we go. There we are. See what levels we're at the moment. Let's look up to this one. Okay. There's lots of toing and froing. It's very choppy. Even on the 15-second, it's pretty choppy. It's not easy. And to be honest, on days like this, if there really aren't trends developing on the 15-second, 30-second, and the minute, then I will sit tight and just wait. I'll wait for some level to be breached. And at that point, I will then find, okay, let's get in. And as long as the volume price is giving me confirmation signals, and the VIX is telling me what's going on, and the dollar's telling me what's going on, and everything else, then I'll just get on with it. But for the time being, all I can tell you is just sit tight, wait, nothing going on, wait and be patient. You might wait till the end of the day and nothing happens. That's the nature of trading one particular market. If you're just an index trader, that's it. Some days are great, some days are not great. Just the way it is. There we are, run over time. Apologies about that. And just see if there are any more questions. Just pull that up. Sorry, always have it closed. I'm in full flow. Thank you. I appreciate. Well, it's you have to find what setup works for you, what you like, and we all fiddle about with charts from time to time and see what works for us. I just find this works great for presentation. It's also, I have to say, I do use it myself because it just gives you an instant view across everything, multiple time frames. You've got 6 time frames here, which is fine. I can quite happily deal with 6 time frames. The only thing I would say in having multiple time frames is that many at any rate, be absolutely clear what it is you're trying to do in your chosen position. If you've got 3 time frames up and you've got the 15-second, 1 minute, 3 minute, whatever, that's what you're doing. You're not looking at the 15, 30 or an hour. So just be careful when looking at multiple time frames and using multiple time frames, and a lot of them, that you don't flip an outright scalping position into oh, well, now I'm reversing that into a trend position. So just be aware of that. That's it. I'm going to run along. I'm just going to show you where all the bits and pieces are. Just move that out of the way. This is where you'll find the indicators over at quantumtrading.com. MT45, NinjaTrader 78, TradingView, and TradeStation. They're all available. We are currently, as I speak, working on TradingView, porting all the outstanding indicators across there. That's currency strength, currency matrix, currency array, and currency heat map, the volume point of control, support and resistance. They will all be available on TradingView in the next couple of months. If you have the full package on TradingView, terrific for you, because you'll get them all free. It's just the way we work. If you buy the TradingView package now at $600 and whatever it is dollars, you will get them all free as well. So it's not a bad time to invest in the TradingView option package there. We will be rolling out TradeStation webinars. I'm going to try and do that next week, where they will be very much stock specific. Remember, if you invest in, you can buy one indicator, but if you invest in the whole lot, then you get all indicators we develop free of charge. It's as simple as that. This is the Forex education program. I know we've got 1 or 2 of our students here, so good to see you. It is called the Complete Forex Trading Program because it's exactly that. It's everything you need to know. I think there's 450 lessons in there. There are a huge number of videos, and I think it comes to something like 250, 260 hours of video in there. There are 13 PDF downloads. It's just a large, comprehensive program because we believe that's what you need to know to trade the Forex market with confidence. And of course, it includes a full set of indicators as well. So if you have 1 or 2 indicators and you're thinking of upgrading to the program, you get full credit for those. We always work in that way. Whatever you're doing, if you want to upgrade from one indicator, you maybe want to buy a bundle, then drop the help desk an email. We're always happy to credit you for what you've purchased in the past from us. Again, it's just the way we work. And since we launched the program 2 years ago, it's been phenomenally successful. We have a huge number of students on it. We've added recently the funded Forex program, which allows you to trade a fully funded account, our money, from either $5,000, $10,000 or $15,000, which is the starting evaluation account, right the way through to 2 million. If you start with 15, you go through an evaluation process. We then multiply it by 4, so you get $60,000 to play with. And then from there on, we double it. So you go from 60 to 120 to 240, 480, right the way through to 2 million. And there's no risk to you. It's not your money, it's our money. We're taking the risk, you're not. It's as simple as that. But that is only available if you're a student of the Complete Forex Trading Program. So that's it. We are done. Enjoy the rest of the trading session. Hopefully it will pick up a little bit later on. Sometimes it does, sometimes it doesn't. I can't say at the moment, but you know, you have to wait and be patient. Thank you for coming along today. Hope you've enjoyed it, and we will see you again next week. You will get details of each week. You'll get an email with the GoToWebinar links in it. So keep an eye out for that, and just register accordingly as to which ones you want to come along to. So enjoy the rest of the trading day. Stay safe in these difficult times, and enjoy your trading the rest of the week, and look forward to seeing you again next week. Thanks for coming along today. Bye for now.